Alrighty, traders, what's going on? Jamie Setley here. It is April 25th, 2019, and this is the midweek strategy webinar. So, good morning to Jay. Can you guys hear me and can you see the screen? Give me a quick notification that you guys can see, and I will dive into the charts. Testing, testing, testing. Can you guys see the screen and can you hear me? Test, test, test. Can you guys hear me? I'm not getting any notification. Can you guys hear me? Can you see the screen? Oh, Pete says all good. Alrighty. All right, took a while there, but hopefully everything is good and everything's coming through clearly. All right, let's start up with a couple of the dollar indices. Actually, go to DXY first. All right, so this is the scenario we've been following for a while. And the thinking here again is we finished a barrier triangle over here as a B wave and breaking higher in wave C. All right, so within that C wave, you would have a 1, 2, and then heading higher in a third right now, right? Now, sentiment is a little, I guess, skewed, you know, in the sense that I saw DSI was, I think, in the maybe 11 or 13 for euro, and I think 91 or something for dollar. That is very short term. So, you know, we could just kind of, you know, consolidate for a couple days to work that off, right, before we go higher. But generally speaking, the levels I laid out last night are what I'm looking at. So basically the old highs here at 97, you know, 70, 97.80. 97.80 would be the high here from, I guess that would be Tuesday, 97.78 to be specific. But that's where you'd want to see us hold if we did pull back that much. Again, if you come back within the range, then you do have the potential for, you know, false breakout, and then we could go hard the other way. So kind of have to be prepared for, you know, the different possibilities, but we know where the risk is. We know where the important levels are. So again, 98.75 to 98.86. You got that over here. That's the March 2017 low. And it's the 127.2 extension of this wide part of wave B. So that's the next level, and that equates to, you know, roughly the 110.70s area that we've talked about in euro. Okay. Now, I actually do want to see where we would have within the C wave. Let's see where we would get the 1618. So the 1618 for that would be all the way up here at 99.62. No good confluence, right? In the sense that we don't have like the 100 spot. Something else I posted this morning on Twitter, which I thought was kind of interesting, was, I think I have it over here somewhere. Hold on. So if we just take a real simple look at DXY. So just looking at a weekly chart and just throwing up a simple fork. that area up here is pretty close to where we were thinking we could get the ultimate high. And I thought it was interesting in that 4 years apart from where, the March 2015 high was, you have the same thing down here as the bottoming process. So 4 years apart from the initial low down here. So we'll take that and just mirror image it. It actually matches up all right. So especially if you, kind of move this here where the low, high, and you can see where we are right now. So this could be something to pay attention to, generally speaking, right? It's just kind of the same process, but it's the mirror image of it. So I don't know, thought it was interesting, something to keep in the back of our minds. Moving on to US dollar. We are at a really long-term level here, right? And again, this is going to be more influenced by Japanese yen too. So we got to remember that. And I am pretty bullish on yen. Trading it hasn't been the easiest to say the least, but I am bullish on yen. In other words, bearish dollar yen. So just want to highlight the level that we're at right here, okay, on US dollar on that index. Moving on and bringing in euro. Same stuff from last night, and that is essentially thinking that the really big level is down here. So simply the levels off of the November 2017 low crosses lows of last year, 2018. So you had the August low and the October low, and that puts you down here. And also that's going to intersect a much shorter term fork, right? So 240-minute chart, we'll go to that. This might be a little too light to see, but there we go. So you can see that just drawing this channel, right? Pretty good touches within here. 25 line, median line, 75 line this morning. Median line is back here as resistance where we're thinking about 1180s. So 1180s, 1070s, pay attention to that. This line, by the way, this magenta line back off of the November 2017 low is really important. And if I extend it back, you'll see what I'm talking about. Hold on, Ty, I see your question. Just want to get this figured out. All right. So you can see the line here off of the November 2017 low. You can see these big levels here, big levels here, big spikes back here all the way back in 2009, 2010, and even this little consolidation over here back in 2007. So there's a lot there, and I really do think that that's going to be a very important level. So Ty, your question is what price is the lower slope and circle and what's the date? So I mean, this is, we're looking at a 4-hour chart here. I mean, this could be tomorrow, right? It could be Monday, it could be tonight. It's just the next couple of days is, these are the levels to pay attention to, in my opinion. So it's more, put it this way, it's more or less now, right? Moving on to, hold on one second. Moving on to British pound, which we really haven't looked at a whole lot, but there is an interesting look here. So if you go to this fork all the way back to last year, right, you can see the lower parallel right here. And we've turned up just ahead of it. So if this whole dollar move is a false break or a false move, false breakout, if you will, cable's an interesting spot to, or an interesting place to look. Because we are right here, turning up right here. Now, I would have to see us kind of get up, get a nice impulsive move to the upside. And I do think this 2960s, 2970s area is really important, right? Just look across, you can see all the touches. right? All the way back to January, resistance, resistance, support, support, right? Support, support, breakdown. So that's going to be a big spot to pay attention to, 29.70s in the British pound. Dollar yen, bastard. We've broken this wedge, right, after that stop run yesterday. Never even got to the 1260s. Thought we, could get a kind of a push there on BOJ or something, but never got it. We've broken the wedge. Focus has to be lower. Essentially, you're zooming in, you can kind of see that this 1180 area, right, low over here from 418, high over here from 45, underside of the wedge. This whole region is going to be resistance. So we'll call it like 1180, 1190. And at this point, after the wedge break, you're just kind of looking down towards lows. So initially, maybe 1084, but let's see if we can, get into a good trade and let it run, because this is a pretty good setup as far as the wedge is concerned. And let's not forget, go to the long-term page and you can see the proposed long-term count, right? Where we have this, basically being the end of a really big E wave. I'll show it right here just real quick. So this one, right? All right, big A, big B, triangle, may have just topped, potentially. We've been talking about this for a while, but it's a pretty good way to do it. Look at a weekly chart and you can kind of see we've got a pretty big weekly candle here, right? Engulfing the tiny range from last week. So it's a good way to start, a bigger drop in my opinion. So I'm sticking with this idea, even though it's been a pain in the ass to trade. All right, moving on to the commodity currencies. Kiwi, pretty simple here, just clean levels to pay attention to near term. Notably, you do have 66.30s right here. It's the 618 of the run up here. I think that the more important level is right up here, which is going to be that 66.60 area. And that is simply slope line, right? Parallel to this line off of the December and Feb highs, and then take that and extend it parallel off the Jan 22nd low. Got good support here on that big drop, right? And that's going to be the level to watch for resistance. And then I would be looking for 65.40 or so support. Big level there. Got a low there in August last year. Obviously the bottom of the channel, 786. A lot going on. So I'll be looking for potentially a bigger low there. It doesn't really jive, I guess, you'd say, with the dollar breakout scenario, but hey, we've got to look at each chart on its own merits. And in this case, it's pretty clean, right? You could have the end of a bigger three-wave drop right down here. So let's keep that in mind with Kiwi. Aussie, simple chart from last night. Old support, right? Congestion throughout a good deal of this year is going to be where you want to see resistance, and that's going to be up here at 70.54, 64, and 70.54, by the way, is the year opening price. So that adds importance to that spot, and we'll be looking towards two equal legs down, which is 69.13. You've got this blue parallel, which if I scroll out, you can kind of see that throughout the last year or so, we have seen a lot of support on this, maybe not, with precision at times, but spiking below it. In fact, this was last May, support here, and obviously really good support back on 3/7, so early March. So we'll be looking at, that's going to be about 69.40, but two equal legs is 69.13. So you get a spike below, pay attention to that area. Dollar CAD, not real sure what's going on, but we have come yesterday's move on BOC, Bank of Canada. We did come into kind of a parallel resistance area. I do think the more important level near term as far as potential resistance is concerned is going to be up here around 35.65, right? Old support from December back here. You do have a parallel up there, but as far as the commodity currencies are concerned, dollar CAD's kind of like the least clear to me, right? It's kind of the messiest and not really sure what's going on. We were looking for, if you remember, we were thinking that we had a triangle here. So we were thinking A, B, C, D, and get another pullback. Never really got it. If we do a measurement off of this, as far as a breakout's concerned, a full measurement is going to take you right to the highs up here at 36.87. So, you know, that is a level to keep in mind, but again, pattern's just not that clear to me with dollar CAD. So if we did get a pullback here, I would be looking for support still on these old highs. All right, that'd be a pretty big drop, but again, just something to be aware of. All right, moving on. I want to look at some of the indices. Obviously, we're getting more interesting price action today. All right, actually starting to see some weakness. And let's see here. We'll go to this in a second, but basic idea is that from the March 8th low, you got potential wedges, all right? So ending diagonals potentially, 1, 2, 3, 4, 5. Really the trigger on this on the S&P is going to, this is the E-mini, so this is futures, but we're talking 2,900. So get below 2,900 and I think you have potential for a much bigger break to the downside. NASDAQ, this is the composite, and same idea, of course, as the S&P, but it's going to be about 79.89. If I go to the futures there, it's a little different look, but kind of the same idea. You have more of a channel actually going back to the Jan 29 low. And there's a lot of room within these channels, right? So the first level you're looking at, let's go shorter term, 4 hour. You can see this morning's drop, we've actually held a level. So this was the old resistance, right? We're right here. So we still can't say that we're, you know, headed lower even near term. You've got to see us get back, you know, back below this level here, which was old resistance, which is going to be like 77.29 over here. So, you know, envisioning what it could look like, you'd want to see a drop and then maybe get resistance back here again. Okay. That's kind of the progression of behavior change that you'd be looking for to suggest that something is going on besides straight up, which has been absolutely insane, I must say myself. The Russell small caps, this is Russell E-mini futures. This is really big. This is really important, guys. So you can see how big this level is. We've tried to break it through it since February 1, 2, you know, every day it seems like in April, and haven't been able to do so. So this could be kind of a false break and send us hard this way. So this is a chart to keep in mind. You know, basically if you start making lower price lows, then I would start to really take that seriously as a more bearish signal generally for the market. I did see a stat yesterday where I think it was something like the S&P up at all-time highs, right? And the Russell 8% below. That's the largest disparity since March of 2000. Obviously, March of 2000 was a major high. So that is something to note, keep in the back of your mind as well. So fractured markets, right? Fractured markets are not healthy markets. And certainly in the equity indices right now, we have seriously fractured markets. Take a look at the metals. It's tempting to want to like kind of call a low in gold and silver right here, but I'll need a little more evidence. So this 1255 in gold is still in play. A couple levels to watch, really just above today's high, right? You've got these old lows over here. That's gonna be 1286. And even if we got to move all the way up to say 1297 or so, that could still be resistance and you could still go lower. So in order to get bullish on gold, I'd need to see a move up through this resistance line up here. Okay. Pooja, what's going on? She goes, anything on DSI, indices, gold, or euro? So like I said, I think I saw euro was, I believe, 13 yesterday. DXY, dollar index, was in the 90s, so that was pretty elevated. And again, that doesn't mean that we have to top, right? It just means that we probably can't go higher and we need to consolidate and pull back a little bit, which is kind of happening today, right? It's kind of a flat day in the dollar. For the indices, I did see, I think 91 or 93, I think back-to-back 93 days in the NASDAQ. So we're getting up there, that's for sure. And importantly, the 30-day average, I think, is like 86. And that's the highest since the end of 2010. And the only time before that was back in 2007, right before the really big top. So sentiment is most certainly up there, but again, does not mean that you can't try to blow out a little more, which is, with the indices, really just watch. I think the Russell's the most important, but we've also got to watch these wedge levels, right, that I noted. So 2,900 in the S&P futures and NASDAQ futures. Just focus on these channel lines. So, 77.28, which is also the old high, obviously key level. All right, going back to the metals real quick, I wanted to look at silver. So just like gold, it's actually a cleaner channel. I'd say in order to get bullish, you probably need to see us back above this channel, right? You don't want to jump the gun, and that means you'd be back above these highs. So it's like 1506 to be safe. And even then, you still have the underside of this old trend line, which was resistance over here on April 12th, and that's going to be 1517. So, just kind of wait for the metals to suggest something. Kelly, what's up? I'm still in the silver trade on a great chart you put out 2 weeks ago, wondering if I should add if it hits 1508. Tough to say, Kelly, because again, we do have the potential for something like a false break in the dollar. What I would say though is if we get up to this 15, maybe not 1508, but if we get up to 1505 and back off from there, then you could add and then at least tighten your stop a little bit. Okay. But as far as leaving a standing order, really tough to say. I do still, I'm still looking towards this 1444 area, but it's kind of been slow moving, right? After you get a big break like this, you'd rather see, quick acceleration rather than us just hanging around down here. And you've got this, right? So it's really wait and see mode with the metals. Now, copper's been getting hit some here, right? So copper, old highs here, really key level for copper, horizontal level, obvious level, well-defined level. You've got highs from July, September, October, December, little fake out turn up here, but we're coming back for it a second time. So if this doesn't hold, copper's going to be in trouble. So this is a key chart to watch as well. In crude, I say just follow this level right here. The magenta line that crosses highs, lows, lows. So this was support last week. It's still going to be a level to pay attention to if you get to it. It's going to be like 63.90, and that to me is the defining spot. So as long as you're holding this, I'd be constructive on crude. Now 63.90 from here is $2. It's a pretty big move. but I wouldn't get, trying to pick tops up here, until either you get a blowout up to here near $70 or turn bearish if you get a break of 63.90. And guys, that is pretty much it for me. I know it's a quick one, but kind of flew through those charts, and I'm kind of under the weather right now, not feeling too good. But are there questions? Obviously, we have plenty of time. Anything that you guys want to look at in particular? Going once, going twice, and not seeing anything. All right, well, if that is it, then that is it. And I'm gonna run and go take some Dayquil and drink a lot of water, maybe get some chicken noodle soup. All right, so I'm gonna get this archive for you guys. Again, still have to err on the long side of the dollar for now. Essentially DXY levels are pretty clear. All right, bullish above the old highs. Prepare to abandon ship if we get back below here, and we'll see if there's setups on the other side. Other than that, focus is towards this 98.75.86 area, which is going to be 110.70s in euro. Okay, and I'll leave you with that. All right, guys, take care. Have a good one. Have a good rest of your week, what's left of it, and I'll talk to you later.